We're joined by Omar Lodhi, CEO of Abraaj Capital Asia. You're very much focused on Southeast Asia, although Abraaj Capital invests heavily in the Middle East. So where do you see opportunities then?
We've got amongst the largest footprints across emerging markets, and that entails Latin America, where we've got deep footprint in about 6-7 Latin American countries. Africa, where we have almost 10 offices around the continent, North Africa, East, West, South, so we're very big in Africa. MENA, which is a big territory, it includes Central Asia, Turkey, which is a big market for us, North Africa, Egypt, then the GCC, Saudi, etc., which are very exciting markets, the UAE, which has always been a big hub for regional activity, India, Pakistan, the subcontinent, and then Southeast Asia and India, as we mentioned. So it's a fairly broad emerging market footprint, and in all respects they share many common characteristics and opportunities which are quite similar in nature. Population, demographics, growing consumer, and the difference, I guess, is where they are in terms of their evolution in terms of liberalization and setting the stage for private sector investment to sort of ramp up. And certainly, I guess, the Middle East started on that front earnestly in the 90s and the early part of this decade, and we were beneficiaries of that as Abraaj Capital when we started our operations there in 2001, and were faced with a lot of, the consumer opportunities on the one side and the opening up of sectors facilitating private sector investment on the other. So it was a happy marriage. Southeast Asia has always been a very attractive market for foreign investment. And I think, post 1997, the Asian financial crisis, these countries have come a long way in terms of strengthening their macroeconomic fundamentals. That combined with stable and positive political regimes and the consumer opportunity, the demographic opportunity is really giving rise to, what we are seeing today.
What sort of sectors are you interested in?
Southeast Asia, with its almost 600 million people, $2 trillion of GDP, a lot of young population, growing demographics, growing middle income classes, so a big consumer play. Anything and everything that sort of touches the consumer services, consumer manufacturing, consumer retail, the supply chain surrounding manufacturing and industry, logistics, healthcare, education. So very much a sort of consumer-driven play as opposed to, and I'm generalizing here, but as opposed to export-oriented sectors, etc., which are not necessarily the mainstay. Simple businesses focused on local communities.
And in Southeast Asia, presumably Indonesia is the market for you.
I mean, that's a common sort of, or at least right now, because Indonesia is hot, right, so-called. And, many of us are sort of the herd mentality. So the herd today, Indonesia is in vogue, and rightly so. It's 250 million people. But much of Southeast Asia is very, very interesting and has depth. I mean, you've got Vietnam, Thailand, Philippines. These are all in the sort of 100-ish million population category. Malaysia, smaller, 25, 30 million people, but has always exhibited and displayed disproportionate opportunities for private equity because of how outward oriented that country is. So all of Southeast Asia, now you've got sort of the younger nations like Myanmar coming into the fold and providing some very exciting opportunities in the next decade ahead. And Southeast Asia, not just viewed in terms of the individual countries, but also as an economic bloc, is very meaningful, very relevant, especially now in the run-up to ASEAN 2015, where we're going to see the opening up of labor flows, capital flows, and trade flows between this region, really creating a lot of opportunities for businesses to look at the region in entirety as opposed to just individual countries.
Are you seriously interested in Myanmar?
Myanmar is very exciting. Myanmar, for all the reasons that we read about. And I think it seems that the country and its government, their desire to reform, legislate, is real and put in place the framework for foreign investment to come in. We are therefore studying and learning about Myanmar, which necessarily takes time. We always like to be local and well versed before we invest in an economy. And so over the course of the next 2-3 years, absolutely, I think it'll be a bit of an educational journey before we actually put money to work. But many of our portfolio companies, on the other hand, are already looking at Myanmar as an expansion of their business opportunities in context of the same ASEAN opportunity I mentioned.
Abraaj Capital has been focusing on the Middle East and Southeast Asia. China, though, is very hot at the moment.
People have been looking at China now for a while, like India. These are two giants, 1 billion plus people. Southeast Asia is the third economic bloc within Asia, 600 million people. We have activities in China. We've got niche opportunities in China. A lot of China's very competitive market, very developed market from a PE perspective. It's a market where domestically very much oriented and connected with the state-owned enterprises, etc. So PE firms who are successful there must have a very, very established local network with both the public and the private sector. Our niche strategy in China is predicated around many roads lead to China for businesses in India, for businesses in Southeast Asia. Indeed, the whole, what we call the South-South nexus, the southern hemisphere, the growing capital and trade flows between different parts of the world. India, China, Southeast Asia, China, China, Middle East, India, Africa, Indonesia, Africa. And that's where we partake and are active in terms of many of our businesses here in Southeast Asia have either supply chain links with China or have offtake into China in terms of where they sell their products. And so those are, and many, with our strong presence in Africa, we are trying to marry that with Chinese corporates who are looking to bridge that geographic gap and opportunity.
You've been speaking here at NUS Business School about Abraaj Capital and how it got involved with Karachi Electric. It seemed from all the challenges that you really do need to be embedded locally.
Embedding yourself in your with your stakeholders. I mean, you're running a business, you're a key shareholder in a business. Our outlook is a long outlook, anywhere from 4 to 7 years. A business, to optimize its performance, its operations, you have to have positive interaction and relationships with each of your stakeholder community. It's in your own self-interests, given the longevity of your operations. In the context of KESC, it was particularly so because of the complexity of the business, the scale of the business, the fact that it is supplying a core necessity on a monopolistic basis, almost on a captive basis, to a population of 18 million people. So whether it be your residential customers, your industrial customers, your employees, which themselves number over 10,000, or the government who you are dependent on and its bodies for regulatory parameters and clarity and certainty, and indeed they're big customers of yours. It is a multifold and very intricate necessity to be able to have a positive, nurturing, and value-added relationship with each of these stakeholder communities. And that was one of the challenges and opportunities that KESC faced, because in the context of its privatization, at the time of being a government entity, many of those relationships were fractured.
During the session, you also spoke about environmental standards and trying to engage with stakeholders and also corporate governance. It could be said, though, and PE has had a very bad press, that PE firms are basically just engaging in asset stripping.
Well, to add to the allegations, asset strippers, leverage generators and all of that stuff. I mean, at the end of the day, and some of the strategies have been openly in defense of the industry in the West, LBOs, and these are just the nature of the opportunities. They're mature businesses, etc. But indeed, we just given our fact that it's emerging markets we concentrate on. These are growth opportunities, as I mentioned. These are opportunities to build businesses and help them grow. and organically through M&A means, and at the same time concurrently or ahead of that growth, make sure that you are putting all the internal parameters and platforms in play to allow that growth to be sustainable. So that's very much sort of what we sort of focus on, and you know, it is in our interest, and you know, the alignment is automatically there, right? Because the proverbial fat lady doesn't sing until, you know, you haven't exited at the end of that 5 years period. You're not just as a PE firm focusing on that 5th year, because any buyer who's going to come and buy from you needs to take a very positive forward 5-10 year view, and therefore to attract an interested buyer, you must ensure that he or she is able to see that positive trajectory going forward. So you must therefore always have a long run view for any business. It's part and parcel of your business model. You won't succeed without it.
Omar Lodhi of Abraaj Capital Asia, thanks for joining us.
Thank you very much.